Eric Muather with another study video. Today we're going to be taking a look at ABGB, which is down about 40% today and about 54% this week. This being a Friday, just want to take a look at the weekly chart and the daily charts and the hourly charts to see if we had any warning signs, and there seems to have been some. If you take a look at the weekly, you see that the stock was making higher highs here on the weekly, but the RSI was making lower lows. In fact, there was a very well established resistance line right there, and so you can see that when it was making this high on the weekly, the RSI was struggling to hold above 61.8. Now this is the worst type of negative divergence, where prices go on to make new highs, but the RSI does not move above 61.8. That tends to be the worst type of red flag. Since then, the stock has been down, obviously. Another thing on the weekly we can see is that to be very careful with stocks that are making fresh all-time lows here on the weekly. As you can see, during this move to new lows on the weekly RSI, that was at a price range somewhere here in the 20s, somewhere here. Also, you can see there was another fresh move to fresh lows on the weekly RSI, all-time lows, which also happened to be here. Price range was, let's call it around $20, $21, $22, or even we can say somewhere around 18, 19. But you see here clearly two instances where the stock's RSI moved to fresh all-time lows. Also, we can see here what happens when a stock moves its RSI below 30.90 for the first time ever. You get this very bearish reaction. Now the opposite is true, in that if you see a stock who's moving its monthly and weekly RSI above 69.10 for the first time ever, you can see that that was a very nice period in the stock where it continued doing well, going on to new highs. So that's the idea, is you want to be in stocks that are breaking out and making fresh all-time RSI moves, and you want to avoid stocks that are moving to fresh lows, as you can see and as we have seen in this example, which it broke down to new lows there and recently there. Let's take a look at the daily. And the daily, we can see again another example of negative divergence. Stock was making higher highs on a daily closing basis in price, but the RSI was showing a well-defined line of resistance which was connecting the highs, the previous highs there, triple top highs there, and this top here, and also through this slight node. So let me draw that again. So the RSI was giving us negative divergence. That was a red flag as the stock was moving to new highs here. Okay, also you'll notice that this resistance here where the stock was making a new high did not move the stock above 69.1. okay, so that's also another thing to watch, that we made new highs, the stock wasn't very powerful. And also, if we use our uniformity principle, and you can find those on my channel on YouTube for free, of course, if you draw a line like that, you can see that this was always going to be an area the market was going to struggle. It did struggle. After that, the stock has been down. Also, recently, we can see here that the stock broke down at the 50 level, and this break right there corresponds with this move lower off the highs. If we draw a straight line coming off that, like that, you can see over the last couple of days we got double top resistance. So before this drop, there was already a sell signal here, and so the plunge makes a lot of sense. I do agree that the magnitude of the plunge is slightly extended. Nobody would have predicted this kind of a straight down move, down almost 40 something percent today, 45% down, but the red flags were already there. That's what I'm trying to say. Also, take note of what happens when a stock trades its RSI below 30.90. You get a very strong push to the downside. Let's take a look at the hourly. And on the hourly here, coming off the highs there was a break of the trend line, which we can draw somewhere here. So that trend line corresponds with the stock coming off the high, and so what we do is we draw a straight line, which would be somewhere there from the break. So this from the previous break point in the RSI, which was destructive, and we know that because the stock came off the highs. We draw a straight line, which is this red line, and without any adjustment, you can see that every time we've hit that line and found uniform activity back below the line, the stock made a short-term high. So lots of red flags recently in this stock before the plunge, and even there. And as of today, we see that it is making a fresh trend break. So this is breaking below a recent line of support, but that did not hold, and since then the break took place. So we are talking about the break right there. So before today's plunge, there's lots of red flags in this chart, and if you are owning any stock, you need to make sure that the red flags are not as evident as has been in the case of ABGB. Eric Moore, the good luck, peace and blessings. Whoa.